What is happening, investors? It is your boy Jack. I am not a financial advisor, and today we're going to be speaking about the 7 stocks that I purchased this week. On this channel, throughout the week, I speak about stocks and general stock market news, and then on the weekends, I put my money where my mouth is. First of all, I let you know exactly what stocks I'm going to be watching next week. That is the video that went up on the channel yesterday. And then I let you know exactly what I purchased this week. This week we invested about $765 into 7 stocks, one of which is a brand new investment in my portfolio. And today I'm going to be trying out a little bit of a different editing style. Usually in my videos, they all start off like this, and then when we get speaking about the stocks, I throw myself up into the corner of the screen. Today, I'm going to try and be a more prominent feature. Instead of shoving myself up into the corner, I'm going to stay speaking to this camera and just put the relevant information on the screen. If you've seen more than one of my videos in the past, I would really appreciate you just let me know in the comment section which style of editing you prefer after you watch this video. The style we're going to go with today, or the one I've used in literally every other one of my videos. Also, this video is going to take a while longer to make than usual because there is more prep time needed and more editing time needed. So can I ask you to please smash that like button? It genuinely helps me out so much, and if we get over 500 likes, I will take that as a sign that you guys want me to keep doing these styles of edits. And lastly, can I please ask you to smash that subscribe button? 74% of you guys watching the video right now aren't subscribed. I'm trying to get to 10,000 subscribers soon so that I can afford to feed my dog. I mean, look at his cute little face. Disclaimer, my dog is treated very well. He gets lots of nice food. He is very healthy. Don't come at me in the comment section, you animal lovers. I love my dog. So with that in mind, guys, we're going to get straight into the very first company of today, and that is Altria. So this week, I went out and I purchased 2.5 shares of Altria for about €93, just over $100. I now have a total of 8.5 shares in Altria, which is close to €300 altogether. And I'm pretty much at break even in that position. Last week, we were up over 10%, but we all know what happened last week. A few stocks got hit pretty hard. Altria is one of my absolute favorite dividend stocks, and despite having fallen on hard times the last couple of years, I personally think they're at a great price right now. Their primary product has always been cigarettes. Unless people have been smoking cigarettes for well over 50 years now in the US. But despite that fact, Altria has actually returned over 10,000% to shareholders in the last 40 years. And that is not even including their dividend, which as of right now is more than 8.5%. And that dividend has been around and has been increased for over 50 years, making Altria a dividend king. It is not often you will find a dividend king that also has that high of a payout. I mean, that's crazy. So although percentage wise less people have been smoking cigarettes, we also have to keep in mind how many more people are in the US now than there was 50-40 years ago. So between increased population size and obviously increased cigarette prices, that has for a very long time served Altria very well. But it gets to a stage where people are only going to spend so much on a box of cigarettes. So Altria needs to keep up with the times. They need to, or else this downtrend is going to continue, and investors like me and you will ultimately more than likely lose money. But this is exactly what Altria are doing. They are keeping up with the times. Now, I actually have a full video on Altria. If you would like to check that out, boom, I will leave it up in the corner of the screen. But Altria are breaking into so many emerging markets. They have a 45% investment in Kronos Group, an emerging global cannabinoid company. They have a 10% investment in ABInBev, the global beer industry leader. They have a 35% stake in Juul. So although there may be less and less people smoking, people still want their nicotine hit. And cannabis also. Cannabis is this massive emerging market, expected to be worth an awful lot more money in the next few years than it is right now. So I am very happy to see these guys being proactive and getting into these markets before it's too late. I think as a shareholder, that's a great thing. Now we're going to have a look at the balance sheet, guys, okay? And we can actually see that their current assets are at $7.9 billion and their total assets are actually at $52.6 billion. Then we have a look at the liabilities, okay? And we do have $11.1 billion in current liabilities and 45.9 billion in long-term liabilities. So not the best balance sheet in the whole world, but they are a struggling company right now. All in all, guys, I'm looking at a company who has been beat up, who I personally believe has really nice growth potential and also has an 8.5% dividend yield. You don't see that often. There is definitely much safer dividend options out there, but there's not really many with the same growth potential and as high of a dividend, so it depends what you're looking for. But that is where we shall leave Altria for today. The second company we're going to be speaking about today, one of my absolute favorite companies in the whole world, is Facebook. I bought another half of a share in Facebook for about $115, which brings my total amount in Facebook up to 2.5 shares. These genuinely are one of my favorite companies in the whole world, and they are the second biggest position in my portfolio as of right now. The very first thing you have to do when you look at Facebook is take a look at the balance sheet. I mean, it is beautiful. The assets against the liabilities is just... oh, you don't see it very often, guys. I mean, it's amazing. Just look at it. They have enough money to get through absolutely anything. They have enough money to buy whatever up and coming company they want, and they have done that in the past. One example is with Instagram. They purchased Instagram for $1 billion back in 2012, and it is now worth over $100 billion. They have bought countless other up and coming companies too. A lot of the time Facebook buys a company is actually for the management behind the company. And Facebook are innovators, okay, in a world where every company is panicking about the future. They're panicking because people can't go into work, they can't do their jobs. When will they get back in? Facebook just said,
sure, look everybody, go ahead, work from home. And you know, when this all blows over eventually, you can either continue to keep working from home or you can come back to the office. Just whatever you want to do.
They took absolutely everything that this situation has thrown at them in their stride. They also own WhatsApp, okay? A platform with over 1.5 billion active users, and WhatsApp is not monetized just yet. They have an audience of 1.5 billion people that they can monetize at any given moment when they need more money. They could also just increase advertising rates on the likes of Facebook or Instagram by 1% or so and make millions and millions. They have several different avenues they can go about to make more money down the line if they need, and they already have that absolutely incredible balance sheet. There is just absolutely nothing I dislike about Facebook. I love everything about them. That is why they're the second biggest position in my portfolio, and I do believe they will be the biggest position in my portfolio relatively soon, and I think that they will maintain that number one spot for a very long time once they get there. Okay, next up we're having a look at Wells Fargo. I bought 3 more shares this week, which means that my total position in Wells Fargo is now 12.6 shares. That is an annoying amount of shares. Another company who has a high dividend yield, it is currently over 7%, but I don't believe it to be the safest in the world. Thankfully, I'm buying Wells Fargo not as a dividend paying company. I am buying them as a growth stock. So that dividend is just a little bit of an extra juicy bonus on top. You can say what you want about bank stocks or financial stocks as a whole, but they have proven that when times get good again, they recover very hard. The recovery in a bank stock like Wells Fargo, I will admit, could be slower than a lot of other opportunities that are out there right now, but I also believe that in 5 to 10 years, I'm going to be very, very happy with this purchase. I'm not going to get any more into Wells Fargo because I've spoken about them quite a bit on the channel lately, and what I'm going to do is make a full video on Wells Fargo, pretty much all the bank stocks, everything in the financial sector soon, as a reference point for people who do want more information, because that will probably be quite a long video. There is an awful lot to speak about. I will, however, leave it with just a couple of quick thoughts. Investing in the banks is essentially investing in the long-term financial success of America. And I, for one, don't want to bet against America. If you cannot handle the volatility, if you cannot handle big red days, stay far away, because more than likely, if you invest in these guys in the next week or two, you are going to see some red in your portfolio. Just make sure to do your research, do your due diligence, and I think that you will be okay. Next up, we're having a look at a little company known as Visa, ticker symbol V. This was my first time ever picking up any Visa whatsoever. I spoke about them in a video last week, and they looked absolutely fantastic to me, so I went ahead and I picked up 1 full share for pretty much $200. Visa's growth over the last 10 years has been absolutely fantastic, and I personally see no reason for that to slow down with the direction that the world is moving. As I've said before, I see a lot of the world moving online, and that is only going to be good for a company like Visa. The first thing we're going to do is have a quick look at the balance sheet in regards to them. So we can see Visa's current assets are at nearly 20 billion, and their total assets are 72.8 billion. Their current liabilities are nearly at 16 billion, and their total liabilities are at 38ish billion. So both from a short-term point of view and a long-term point of view, balance sheet wise, they are in a very good place, and a lot of companies aren't right now. Their PE ratio is currently at about 34, and their stock is at absolute all-time highs. If we look back through the last 5 years or so, we can see that their PE ratio has been somewhere between 25 and even up as high as 43. So although it is higher than the industry average, or a standard PE ratio that you might look for, it's in line with where it has been in recent history. And these guys are only better than they were 5 years ago, better than where they were 4, 3, 2, 1 years ago. They're in a fantastic position. valuation. Their EPS is literally at all-time highs and their stock price is at all-time highs. And just thinking about Visa practically for a minute, you all probably have a Visa card within your room, wherever you're watching this video. You probably use it every day to buy some sort of product or service. You probably have one that you have reoccurring payments set up on. We live in a world where pretty much everybody uses a Visa card of some sort. You cannot realistically be an adult without some sort of a credit or debit card. It is just the way the world works. You have to have one to get your money from the bank, where your employer pays you. The days of cash are slowly but surely dying out, and Visa is one of the massive players in the online payments world. They make an awful lot of sense to me, and that's why I finally went ahead and got them into my portfolio, starting off nice and modest with 1 share. Oh baby, now we're having a look at Google, and I went ahead and picked up 0.1 of a share in Google, bringing my total position up to 0.3 of a share, and that has also put them into my 3rd biggest holding in my current portfolio. And very similarly to Facebook, I just love absolutely everything there is about this company. There's nothing I don't like. They have so many amazing and useful products and services. Google search engine, YouTube, what you are literally watching this on right now, Google Maps, Google Home, the list literally goes on and on for what seems like forever. And similarly to Facebook yet again, Google can essentially afford to just do whatever it wants. It has the means to do so. 147 billion in current assets. 273 billion in total assets. Those numbers are huge. Only 40 billion in current liabilities and just under 70 billion in total liabilities. Another absolutely beautiful balance sheet that just goes to show how successful Google are, and they can literally do what they want. Google did somewhat underperform in Q1, largely due to what I said in regards to Facebook earlier, that a lot of people aren't willing to spend as much money on advertising right now just because times are tough and they have to cut costs. Q2 is expected to be better though, which is obviously a very good sign. But again, with a company like Google, who really cares what happens in the next 3 or 6 months? It is about what happens in the next 5 to 10 years, and that is where the magic could happen with these guys. Right now, a lot of companies are struggling. They can't spend as much on advertising. That means that I directly am going to make money. That means that you should most definitely smash the like button so I don't go broke. All in all, it's Google. You're all aware of them. You're all aware of some of their most popular products. Quite easy to understand the absolute basics in them. I love them to pieces. They are the boys. Okay, so we just have 2 companies left. Okay, the second last company today is McDonald's. I mean, absolutely all of you know who these guys are. All I did was I went ahead and I picked up half a share. That brought my total position in the company up to 1.75 shares. You can go absolutely anywhere in the world and you will find a McDonald's. It does not matter where you are. They have one of the strongest, most prominent brand names in the entire world right now. They did fall on very tough times given the situation. They had to close down pretty much all of their restaurants worldwide at one stage or another. But as of the last few weeks, they have been starting to open back up, which is obviously very, very promising. The McDonald's where I'm from recently opened back up, and I am not joking you, I have never seen queues as long for any restaurant, any fast food chain, anything of the sorts in my entire life. It was crazy. People are willing to queue 30 to 45 minutes of their day just to go and get a double cheeseburger and a few chicken nuggets. What I want to speak about McDonald's, first of all, is the balance sheet, which in general looks quite good. Short term, current assets versus current liabilities were looking good. Long term, the total assets versus the total liabilities, not the best in the whole wide world, but they have a lot of time to improve on. What I want you to have a look at quickly is their gross property, plant and equipment and their net property, plant and equipment. A lot of people don't understand just how much real estate McDonald's owns. It's not just the chicken selects and the milkshakes. It is the real estate that the buildings themselves are built on that is worth an awful lot of money. They have a lot of real estate. They have food that an awful lot of people love. They have a very, very easy to understand business model. It makes a lot of sense. They're not the most exciting company in the world, I will be honest. They're not a growth stock. They don't have the biggest dividend in the entire world. What they are to me is they're somewhat of a defensive investment, okay? They have a modest growth rate. It's decent. They do have a 2.5%+ dividend yield, which again is decent. They are attractive to me because I believe that they are very, very, very safe in the long term. I don't see a world without McDonald's in 10 to 20 years. I'll put it that way. Not every company has to be a Delta. or a Facebook or a Nikola Motors or anything along those lines. Some of them can just be nice, safe little companies. Okay, and the very last company, I'm going to keep it really quick, is Pembina Pipeline. I had $15 left over, I purchased half a share. Wells Fargo, Altria or AT&T is usually where I put my leftover money, but I bought Wells Fargo and Altria this week. I bought a little bit of AT&T last week, so I just thought I'll bang whatever's left over in a bit of Pembina, a relatively new investment of mine, a small position. What's $15? A few quick points on why I like them. 7.5% dividend yield. Now, it's not the safest in the whole wide world, I will give you that, but as of right now, 7.5% dividend yield. The max stock chart is very nice. There was only one considerable dip from 2014 to 2016, and this was because of political issues going on in Canada where these guys are based at the time. Aside from that, it has been very nice growth in the upwards position, slow and steady with that nice dividend. But I mean, I literally bought $15 in these guys, so I'm not going to spend a lot of time speaking about them. That is all of the companies that I went ahead and picked up this week, people. So guys, I do hope that you were able to find some sort of value in today's video, or you at least just enjoyed hearing me speak about the stocks that I bought this week. If you have watched till the end, please do let me know what you thought of this style of video compared to the other style of videos that I generally do. I am very interested in hearing your guys' feedback so I can make the best videos possible. I appreciate you all for watching till the end so much. You guys are the real MVPs. I mean, you guys are crazy. You are legends. You already know I love you guys. With that being said, I hope you all have an absolutely fantastic day. Enjoy the rest of your weekend. Have a great week next week. And let's get ready to see what the market has to do tomorrow. Have a good one, guys. I will see you for tomorrow's video. Peace.